Well, hello there. I'm Kim Berry, editor of Food and Drink Business. Welcome to Play, our weekly news roundup brought to you by automation leader SMC, more than pneumatics. From baking and brewing, SMC has you covered with automation products featuring world-class efficiency. March marks the beginning of Food and Drink Today, our daily digital news bulletin. It will pop into your inbox at 9:30 every morning, and with each day featuring a different focus feature, as well as the top news stories, product and equipment news. If you don't already subscribe, head to the website, which has had a lick of paint, and click subscribe. It's right there on the right-hand side of the homepage. In the news this week, the day finally came for Freedom Foods Group, now rebranded as Noumi, when ASIC announced it was suing the company, its former CEO and CFO for alleged disclosure failures and breaches of director and officer duties. It's in relation to the near collapse of the business in 2020. ASIC alleges the company failed to disclose information on the value of its inventories in the financial reports for financial year 2019 and the first half of FY 2020. What the company initially said would be a $25 million write-down in May of 2019 was ultimately $590 million, with several years results needing restating. FY19 went from an $11.6 million profit to a $145.8 million loss. There's also the issue of not recording $372 million in capital expenses as capital expenses. In other news, Australia's cultivated meat company Vow Group has applied to FSANZ for its cultivated quail meat to be granted novel food status, i.e. that it's safe for humans to eat. Yes, this is a hugely divisive concept for many, and yes, we are some way off from meat grown from the cells of an animal in large metal vats being something we pop into our shopping trolley every week. But the science, ingenuity, tenacity and determination shown by founders Tim Noakesmith and George Peppu and their team to even get to this point on a tiny amount compared to companies overseas is truly quite something. Scott's Refrigerated Logistics has gone into receivership 3 years after Anchorage Capital Partners bought the company with the intention of turning it around. An additional $70 million lending facility from Gordon Brothers last year was not enough to do so, with the pandemic, climate disasters, the war in Ukraine, rising interest rates, inflation and the price of fuel all playing a part. Quarter Mentha has been appointed receiver, and there's already news that buyers are circling, including Toll, Lindsay Australia and Linfox. That'll do for this week. For all these stories and more, head to the fancy sparkly website, foodanddrinkbusiness.com.au. Thanks to SMC, and with that, I'm Kim Berry, over and out.